Let's jump into the top 3 symbols that we trade for weekly income. There's just these 3 symbols. These are really the only ones that we use for trading these weekly strategies that we're going to talk about. 1, SPX, and that's the S&P 500 index. Next is RUT, the RUT, as we like to call it, and that is the Russell 2000 small cap index, and then NDX, which is the NASDAQ. There's several reasons why we trade these for our weekly strategies. And there's a blog post that we've put out. If you just go to our blog and search this title, European versus American style options, there's a little bit more detail. But as it relates to these weekly strategies, these are the only 3 symbols that are liquid enough to trade. NDX is actually a little bit borderline, and it's a really huge product. So in other words, a lot of buying power. So really only for very large accounts. We mostly trade SPX and RUT, okay? So there's 3 available, but really we only trade SPX and RUT, those 2. And here's why. Here's what the difference is between a European style option and American style. 1, with European, you can't buy and sell shares of that index, okay? You can't buy shares of SPX. You can't buy shares of RUT. There's SPY and IWM, which are the corresponding ETFs, and you can buy and sell shares on those, but on the actual index, you can't buy and sell shares. However, as we'll talk about, you can trade options, okay? So SPY, IWM, all individual stocks, those are all considered American style options. The difference here is with European style is these settle to cash, whereas the American style settles to stock. Now, where is that important? If you skip down towards the bottom where you look at exercise and assignment, is if you get assigned on one of these, you're getting assigned that stock, right? But with European style options, you can't get assigned, and they only are exercised after the last day of trading. So on expiration day, and they settle to cash. So if you forget about it and you just let it expire, it's just going to put that amount of cash that it's worth in your account after that expiration day, settles to cash, so you don't have to worry about assignment. Now that's important because we are trading so close to expiration. As you get closer to that expiration date, the risk of assignment gets higher and higher. Okay, so that's why when we're trading these in our core monthly income strategies, it's okay it's fine to use these. We don't have much of a risk of assignment, where we will every once in a while, but we close these out before expiration. And so that's why we very, very rarely get assigned. Now, keep in mind, if you get assigned, is that really a big deal? No. What we like to do is if we get assigned, we simply just close out the trade and move on. And it's not that big of a deal. It doesn't change your overall risk in the trade. It might change the overall buying power needed in your account, but that's the situation. Now, I'll make a point about this again later, but can you trade these weekly strategies with SPY, IWM, some of these stocks and things? Yes, you can. You just have to deal with assignment potentially more often than not. And they're much smaller. We like to collect a bigger credit, have a bigger amount at play with these because you are getting closer to expiration. The value of the options are typically less, and so that's one of the other reasons we like to trade these indices. But if you want to get really, really small, you can trade some of these other symbols as well. You just got to understand the whole assignment thing. Lastly, and this is a big deal. Now, we don't trade different symbols just because of the taxes. If it doesn't make sense, we're not going to trade it just for the tax benefits, but this is a huge bonus. And here's how that works. When you trade SPX and RUT and NDX and these European style options, your tax treatment on your profits is different. And the way that it's different is on your profits, 60% of that profit is taxed at the long-term capital gains rate. The other 40% of that profit is taxed as ordinary income or short-term capital gains. As opposed to American style options, SPY, IWM, all the different individual stocks, those are all treated, if you're holding a position less than 12 months, which if you're trading options, then you are, then on 100% of your profits, you're paying short-term capital gains, which is based on whatever tax bracket or tax rate you are in. We are not tax advisors. Please consult your tax advisor, but these are just general guidelines. Now, here's the tax brackets. I just pulled these off the IRS website, so you can go there. Hopefully, these are kind of small, so hopefully you can see what I'm looking at here. But basically, we'll look at if you're single or if you're married. If you're single, and you make a certain level of income as stated here, then you're in this different tax bracket. You're in this different tax rate. So that's what they are if you're single. That's what they are if you're married filing jointly. So any short-term capital gains are taxed at that rate. Long-term capital gains are less. Okay, so if you're single and you make up to $39,000 on long-term capital gains, you're paying zero. Okay, you're paying zero tax. If you make between $39,000 and $434,000, you're paying that long-term capital gains rate of 15%, and over $434,000, you're paying 20% on your capital gains. Those income levels are a little bit different if you're married versus single, or there's several other ways to file as well. I'm trying to give you just a broad general overview to give you an idea of the benefit of the taxes on your profits trading these European style options versus the American style. So on the European style, like SPX, RUT, NDX, 60% of your gain follows the long-term capital gains. The other 40% is taxed at your tax bracket rate, along with your other income. And then if you're trading American style options, which is the majority of what we do, 100% of those gains are taxed at whatever tax bracket you're at. Hopefully that makes sense. The IRS loves to make things as confusing as possible, but hopefully I broke that down to make a little bit of sense for you. Basically, long-term capital gains typically lower, short-term capital gains typically higher. If we can benefit, that's a good thing.